Welcome back. There's about 3 minutes to go for the pre-open session, and we're counting down to it. It should be a softer start, 22 points lower. I mean, pretty similar to what we had on our hands yesterday. Lots of ups and downs, but finally the impulse to buy the dip was predominant. The one stock yesterday which got a lot of attention was IEX, and for good reason, and maybe it continues today as well. The news is that 13 states have been barred from accessing power exchanges due to non-payment of dues more than 5,000 crore rupees. These include states like Maharashtra, Tamil Nadu, Karnataka, Telangana, Andhra Pradesh, Madhya Pradesh, Bihar, Rajasthan, among others. Shares of IEX fell sharply and then recovered some by close. Abhimanyu is here with what has transpired. Abhimanyu, hi.
Well, sources have told CNBC-TV18 that 13 states have been barred from participating in power exchanges. This has happened as per rules framed by the Ministry of Power for non-payment of dues by DISCOMs to GENCOs. Such instances have happened in the past too. Whenever this has happened, states have cleared their dues in a matter of days. However, this is one of the rare instances when DISCOMs in as many as 13 states are affected. Buy and sell transactions in all products of power market have been restricted for DISCOMs with high dues. The move under new LPS rules will be applicable August 19 onwards. The 13 states which are affected are Tamil Nadu, Telangana, Madhya Pradesh, J&K, Manipur, Mizoram, Jharkhand, Bihar, Rajasthan, Andhra Pradesh, Maharashtra, Karnataka and Chhattisgarh. Total pending dues of state DISCOMs to GENCOs are rupees 5,085 crores, with Telangana owing over rupees 1,380 crores, Tamil Nadu owing over rupees 926 crores. So clearly, dues which have mounted over the past few months have piled up, and of course, the government order has come into effect. It remains to be seen how early the dues will be cleared, which will again allow DISCOMs to participate in power exchanges.
Abhimanyu, thank you very much for that. You know, Rajesh, IEX is one of its kind in terms of listed entities. So it did get, very high P multiples at one point. It's fallen sharply now. Any thoughts at all on the business itself?
Again, I don't know how I can comment on individual stocks. So I'll refrain from that. But certainly, I think, the power issue is really a vital one. I think there is some cynicism whether they will be able to carry out what they are threatening to do. I think that is really where the challenge is. This is the power sector reforms have been talked about for the last 20 years or so with the Electricity Act of 2003, and yet we struggle with this basic infrastructure. Given that it's a state subject, it's very difficult to discipline each of the states. My sense is this is really a huge problem, but I think there is some cynicism whether they will be able to carry out what they are threatening to do.
All right, Rajesh, we'll leave it there today. Thanks a lot for joining us. Good talking to you, as always. Well, the pre-opening rates are going to hit us soon. Keep an eye on the currency in the futures markets opened slightly weak, 0.2%. Of course, dollar index is surging, and Brent prices have also gone up 5% overnight. So 79.77. Today is also the weekly options expiry on the currency. So it would be interesting to see if there's more decline which takes place here. Pharma is a space which was under pressure yesterday. A lot of stocks under pressure. Vishal Manchanda is joining us now. He of course tracks the pharma space at Systematic Group. Vishal, good morning. Thanks a lot for joining us. So quite a bit of pressure on names like Dr. Reddy's. What's your view, given the recent news flow, and also on the pricing front, there's been some pressure. How would you approach these big pharma names?
Yeah, hi, good morning. So I think ranitidine so there was news around ranitidine wherein product liability litigations have been filed in the US and generic companies are defendants. So what I would think is it is for the first time we are seeing generic companies being litigated against for a product cost injury, drug cost injury. So there is no precedent that I've heard about generic companies paying huge sums of money. So innovators have been actually punished for drug cost injuries in the past, but generic companies, it is unheard of. So there was a settlement yesterday wherein generic companies paid out about $0.5 million to a litigant. So this payment was actually not on account of companies have submitted that the drug is causing injury, and but they actually paid this out because they thought the litigation expenses would be higher and it is better to settle it. So this case doesn't set a precedent in terms of whether generic companies are liable or not. So once I think there are larger number of cases and these cases get consolidated, we'll get to understand on what's the situation.
So Vishal, I mean, as they say, when it rains, it pours, right? For a lot of these companies, in any case, the US markets were under a bit of pressure because of the pricing pressures over there. So that was, in any case, a headwind that they were facing. And now this. What do you do with stocks like, say, Sun Pharma, Dr. Reddy's? Those are your preferred picks, I understand. But tell us about the way forward. And do you see any cap to the upsides because of this?
So I think price erosion is something we have been all facing for last several years. My sense is if you look at the generic price index over the last 10 years, a long-term trend, prices have almost deflated by 70-odd%. So I think there has to be a bottom. Gross margins, if you look at gross margins of companies, they have come off a lot in the last 1 year. Companies are discontinuing drugs now. So Lupin discontinued about 15 drugs in the US. So I think Indian companies have never talked about discontinuing drugs, and we have started to hear on those lines. And India, as we know, is the lowest cost producer in the world. So my sense is it can't get worse, but when it will start improving is the key question, maybe 6 months, 1 year. And the key determinant would be how capacities are put to use. So if Indian companies get alternative avenues to put their capacities to use, pricing pressure should ease off a lot. Maybe there'll be pockets in the industry wherein we'll see huge price surges too. So maybe it's 6 months away or it's a year away, but for sure we'll see prices getting better from here.
So you're saying, the worst of pricing pressure in the US perhaps it may be behind 6 months out.
Probably.
A lot of regulation and talk by the current US administration to bring cost of drugs lower in the US. I don't know how much of that is fed into actual policy and regulation, etc. But that doesn't worry you?
So Biden, so we just couple of days back, we saw a law being passed to lower prescription drug prices in the US. So I think that law pertains more to innovators, wherein and that it's going to be implemented very gradually. The first set of drugs, wherein Medicare, the largest insurance agency, as you would call, would start negotiating for drugs from 2025 onwards. So no imminent impact, but I think over time it will have some impact, and that too more on innovators, but no material impact on generic companies.
So in terms of the large stocks, what's your view, say, on Sun Pharma? Because that came out with good numbers. We saw a decent move. But in the last few days, we've seen quite a bit of price correction.
So I think one reason could have been this ranitidine litigation news. That is one. But so Sun Pharma overall is better poised than others. Reason being is they have been able to, so they've actually shifted their US business from generics to patented products. So patented products have two things which make them better than the generic drugs. You are allowed a price increase every year. Second is that the headroom is very large in terms of scaling up your business. So generics probably don't have that headroom. Maybe they can add another $200 or $300 million. As we know, the generic, about 90% of the US is already genericized. And so there is only another 10% of prescriptions which will probably be genericized in the future. So the headroom is not there in the generic industry as much as it is in the innovator, in the patented space in the US. So that's where Sun Pharma has differentiated itself, and it can actually give structural growth in the US.
Okay. All right. Well, we'll leave it at that. Vishal, thanks a lot for joining us. and giving us an update on what's happening in the Indian pharma space. Because of this move that we've seen in the US, there has been a little bit of pressure on the pharma companies. Another stock that we're looking at this morning is Tvs Motor. Now, Jefferies has raised their target price on Tvs Motor. In any case, the stock has been sitting at a fresh 52-week high. Jefferies has raised the target price from 1100 to 1200. And the reason for this is that they're saying that Tvs Motor is narrowing its profitability gap with its peers. And there's a big inflection point in the electric vehicle space. It's been doing very well with the new TVS iQube in the electric vehicle space. Now, the average EBITDA per vehicle for TVS Motor way back in FY10 was around 2,300 rupees. And it was 70% below Hero and Bajaj's EBITDA per vehicle. Now, the EBITDA per vehicle, the operational, of efficiency has gone up to 6,400 rupees in the last 4 quarters, and now is trading just 35% below its peer average. So it's narrowing its gap between its peer group, and that is reflective in the stock. They're also saying that TVS is now the number 3 player in electric two-wheelers with a 14% market share. So that's something that the street definitely likes, and Jefferies has gone and raised their target price.
Okay, yes, that's on TVS Motor. It's been a phenomenal outperformer, of course, all through the last 6 months or so. 981 now on the stock. Let's now address the windfall tax, because it's win some, lose some. Clearly some benefit for ONGC and Oil India, but a bit of a negative for stocks like Reliance. Let's revisit what came overnight. Sonal?
That's right. Well, overnight we got the news that in its third fortnightly review, the government has gone ahead. They have reduced the cess on crude production, and that has been reduced to 13,000 rupees per ton from 17,750 rupees per ton. On the flip side, as a negative surprise, they've actually gone ahead and increased export duties on both ATF and diesel as well. So ATF export duty has been hiked to 2 rupees per litre from nil, and diesel duty has been hiked to 7 rupees per litre from 5 rupees per litre. However, export duty on petrol is still nil, and this is effective from today, that is 19th of August. CLSA says that this, of course, is a positive, that they have been continuing this fortnight review, and this cut in cess implies a post-tax realization of $77 per barrel versus $76 per barrel and $71 per barrel in the first 2 revisions that the government took. This raises confidence that government is okay with the realizations around $75 to $80 per barrel. Even more positive, because these stocks are trading at cheaper valuations. They are factoring in oil realizations around $50 per barrel. On the flip side, it's a negative surprise that ATF and diesel export duties have in fact been hiked, and this when we have seen a decline in refining margins versus the last review. It is down around $2 per barrel. This will increase the impact on refineries such as Reliance Industries, where the impact will be increased by $0.7 per barrel to $2.2 per barrel. So there is some dampener coming in for Reliance Industries, but definitely a positive for Oil India and ONGC.
Okay, Sonal, thanks a lot for that. The pre-open has settled, so that gives us time now to revisit the 9-10 calls. Actually, the pre-open has settled in the green for the Nifty up 10 points and the Bank Nifty up 76. Mitesh, if we open here, do you trade it, and what's your 9-10 call?
No, as I said, I think I'll still wait for a bigger decline. But on the stock side, Godrej Consumer is a buy with a stop at 894 for a first target of 960.
Okay, well, thanks a lot for that. Let's shift focus now to some very interesting corporate commentary. Our managing editor, Shireen Ban, caught up with Michael Maybach on his first visit to India after taking charge as the global CEO of MasterCard. Here are excerpts from that conversation.
A almost physical sense of optimism. I mean, it's probably helped by the fact that you look back on 75 years and then all the achievements. But my reference point was really the visit 4 years ago in 2018. What I see today, particularly through the lens of our business, when we look at the digital economy and how it's growing in India and the growth rates of UPI and so forth, there is technology put to work at scale in unprecedented ways in India. And as a tech company and as a tech geek, I find that hugely exciting. So I'm going to go back and see there's models emerging in India that we should all think about and see what else we can do and how we evolve our business in partnerships with fintechs and other companies that are using this technology here in India. That was the conversation at the dinner tables last night here in the hotel.
So I just want to take that point forward. From your strategy of buy, build, or sort of partner, where does India fit into that strategy currently, and what is it going to mean in terms of future investments?
So let me just say a few things. We're not a credit card company to start with, so let's just...
that transition you've been on for the last couple of years.
Let's just baseline on that. So as a payment technology company, we kind of broadly speaking, what we do, our strategy is be in payments, whatever choice of payments is there. Like India is offering a lot more choice in payments than was there even 5 years ago. So it might have been cards, and now it's UPI, it's account-to-account, it's push payments. You want it, you have it in India. So we want to offer solutions in all those spaces. That's our stated strategy. It's different in different countries. And here in India, certainly there's more choice and bid there for that. But then that's also the question. So if you have that rapidly rising digital economy with all these different payment choices for people, how do you keep it safe? How do you keep it simple? That's another part of our strategy where we say every kind of service that makes this simple, address the cyber risks, is your digital identity compromised, all those kind of things we take care of, and we then partner. And that comes to the partnership point. We say, on payments, there's a lot of partnerships required, for example, on nascent areas of payments, B2B payments. There's a lot of inefficiency in B2B payments, which we bring solutions to the party. Basic P2P payments, here in India, UPIs are an amazing success. We don't really need to partner on that, but the question on cybersecurity and how do you make sure that these payments remain safe as this becomes one of the, if not the largest digital economy in the world, that's a partnership area.
Okay, that was MasterCard. By the way, I just want to point out a couple of stocks. BPCL is ex-dividend, so that's why you're seeing that that loss. So ONGC, of course, is going to open higher because of that that windfall tax cut, so that obviously helps on export on crude duty. I think that's for ONGC. Kotak is the other one, which we're still awaiting that, I think, FTSE outcome. Mitesh, any word on Kotak? Technically, I mean, it's been a rank underperformer, but the last few days, because of the anticipation of what may happen with the FTSE review, we're seeing some gains. Chartically, how's it looking?
Well, yesterday was a very strong and a big candle on the upside. Typically, I think, and while there's an event, yet I think I would say that there should be follow-through on the upside. Now, we saw weekly closing higher at 1946, 1950 levels on the 27th of May. I think that should be tested, and once that is cleared, then I think the stock should get stronger and head towards 2050 to about 2100.
Okay, Mitesh, thanks a lot for those calls. Let's now look at the market opening. The first rates are in, and the Nifty is up about 14 points, 17,973, 978, 982. Well, who knows, maybe the market wants to make a dash to 18,000. 17,986 now on the Nifty, and the Bank Nifty is leading it once again with a gain of about 100 points. The top gainer on the Nifty is ONGC. It's up about 1.3%. Apollo Hospitals is doing well. Axis Bank, Kotak Mahindra Bank doing well. Mahindra, M&M, that is Tech Mahindra as well. Hindustan Unilever, Titan, these are few stocks doing well. Ultratech Cement as well. Cement had a good day yesterday, so that's sort of is following up. Now the Nifty is facing some congestion at higher levels, so gains have been reduced. 17,972. And the Bank Nifty as well, the gains are getting rapidly reduced now, just about 28 points. On the way down, you have Reliance, which is clearly impacting the market. So 1/3 of 1% on Reliance. IndusInd Bank, Grasim, Power Grid, HDFC Bank are a few stocks which are down, but not by a lot. On the Nifty, of course, is still at 17,972 with ONGC leading it with 1% gain. And auto stocks doing well, by the way, once again, Eicher Motors and Mahindra. Sonia, over to you.
Very good opening for the mid-cap index. 100 points in the green already. That's up 0.3%. The advanced decline ratio is also quite positive, actually, at 1,700 stocks on the advancing side. The small cap index as well has had a very good run. Adani Group stocks are doing well. Adani Power is up almost 3.5%. Some of these sugar stocks continue to, see an up move from the beaten down level. So Bajaj Hindustan is up about 6.5%. Sona BLW, after yesterday's pressure post the block deal, is bouncing back a tad bit, up about 1.5%. NHPC on those two hydropower project orders is up almost about 2%. Vodafone Idea trading a tad bit in the green, up about 1%. So keep an eye out on that. Some more stocks in focus. IEX, after the big fall yesterday, is stabilizing, but not as much. So do keep an eye out on that. Then you have a couple of these other names. IRCTC is down almost about 1.5%. So track that closely. Capacity Infra also has some news flow on it. So up almost about 2% on Capacity Infra. And a couple of these other stocks, Reliance Power, etc., trading in the green. Indus Tower is also up about 1% and then you have names like M&M, which are now trading in the green from the frontline indices. Eicher Motors, M&M is looking to buy General Motors Talegaon plant to further its expansion plans, so do keep an eye out on that. Wipro, you have Kotak Mahindra Bank, Axis Bank from the frontliners that are looking good. All in all, not a bad opening at all. Trending in the green, the Nifty holding on to 17,970, just about 3% away from all-time highs, and mid-caps are doing much better.
I mean, once again, there's no dip to begin with, and it's doing just fine, and it'll be a decent end to the week as well. So we're looking at, I think, the fifth straight week of gains. 1.5% for the week. That's what, 260, 270 odd points Friday to Friday if we end here, unless and of course there is something changes here next few hours. IIFL is down 1.5. It's got huge volumes, IIFL. So might want to keep that on the radar. IRCTC we mentioned earlier. Tata Elxsi is starting 0.25% lower. Big outperformer. Indocent is down 1%, 1,094. Again, only picking out things with volumes at this point. Max Healthcare. The day earlier this week when that big block changed hands, the stock ended 9% higher. It's at about 378, 2% lower today. BPCL is down 1.75%, again on decent sized volumes. There is Interglobe, I think we mentioned that, 1.25 lower at this point in time. So that's basically what's down on volumes, and just a few names on the upside with volumes. There is Adani Power and Green, Adani Green and Adani Power, both 3.5, 3.75% higher. There is Piramal Enterprises, which is down, which is up 3%. 2016 on Piramal Enterprises. Tata Chemicals is now knocking at 1150 with a 3% gain. Coforge 3% higher on decent sized volumes. HEG and ITI are some of the other names with decent sized gap ups to begin the day. So that's the broader markets for you and what's got volumes at this stage. 15 points on the Nifty, neither here nor there, but not down, as SGX was at one point indicating. Sandeep Bhatia is with us, Head of Equity India and Country Head India at Macquarie Group. Sandeep, pleasure having you with us as always here on the program. Thanks very much. Very, very sharp moves, Sandeep, and so many large blocks which have happened in the last 10 days, maybe a little more. There is the Sona one, there was Max, which I was talking about earlier, there is Loda, Crompton. Just give us a flavor of what's going on the deal side with all these large blocks coming and also getting not easily but fairly well absorbed quickly.
So I think India is back in the game. Emerging markets still struggling, but India is clearly benefiting from a lot of positivity around both the geopolitics that's happening in the region and also on the broader Indian economy, which seems to be holding up better than most people expected 2 months ago, which is why the deals are happening. I would expect the continued interest which FIs have shown. We have seen some buying happening recently across our desks, and that's something which should continue. So I would expect this momentum to continue for the next couple of months, well into the Diwali season.
Okay, well into the Diwali season. Tata Chemicals is really one of your stocks of the morning. It's out of F&O ban actually, and that's the reason. The recent high was 1160, and we are at 1151. So if you go above that, sort of enters the blue sky territory. So it'll be interesting to see if it goes above that, out of F&O ban. So that's clearly been the reason that you're seeing this sort of sentiment uptick on Tata Chemicals. Sandeep, good morning. So the kind of FI money that we have seen return back, there's no way of knowing that how much of it is hot money, how much of it is long only funds, sort of buying stocks at cheaper levels. But what's your sense? The kind of stocks that have gone up, like so Bajaj Finance, seen some decent gains in some of the IT names as well. How are you viewing this this fund flow change?
So two things are happening here, which I think people should understand. One is that the FII money is coming into India because in some ways there's a structural derating that's happening in China. And the emerging market universe for very obvious reasons was dominated by China. It's now getting much narrower. I think longer term, essentially, it's not great for the entire emerging market universe set, because if China becomes uninvestable structurally, then it basically means that, and Korea becomes a developed market and exits. We essentially have just maybe Brazil, Argentina, India, and the emerging market set. So then it's structurally not going to be a great place if you are an EM benchmarked investor. But I think what's happening right now in India is that people which were betting for a big China rebound in the first quarter, we saw inflows into China happen too, were very disappointed with the news flow which has come through. So some of these monies have come back into India, and that's helping India. The other thing which is also happening is the commodity edge and the pressure on high commodity prices, both on the macro and corporate earnings growth. The belief is that if China really slows down into the second half of this year, we definitely have a better macro position emerging for India. And corporate earnings growth and margins, which were under pressure, would therefore reverse. All this is something which definitely is helping India and the markets. And this money, therefore, I would think is not hot money. It's here for the longer term. And also the sectors that we in Macquarie are positive are in the IT sector and financial sector. And I think the inflows are also coming in both these sectors from FIIs.
So where does one find value in this market now, Sandeep, after the run-up that we've seen? What does one buy? What does one hold? I mean, I know you don't want to talk specific stocks, but sectorally, where do your preferences lie?
Now, we can't talk on specific deals or stocks, but I can say one thing. India is the nightmare for the value seeker. The Indian market has traded expensive for long periods of time. Relative value is the only thing I would seek in India, and this relative value is essentially in the financial sector. To that extent, we like HDFC Bank, we like ICICI Bank, we like IndusInd Bank. These are names which are definitely both good in terms of underlying earnings growth, and also the fact that they are cheaper than the rest of the market in a relative way.
Okay, Sandeep, I just sort of the point that you mentioned, right, about China, and it's a more structural kind of thing. But is it structural? I mean, what are you hearing from your colleagues, in the region, etc., or is it are people making too much of it? I mean, there's lots going on there, not anything positive at all. But are we at that point where, as you said, uninvestable? I mean, are we looking at that kind of thing?
Well, I've been talking about geopolitics for 2 years on your channel, and I don't think most people appreciated how much India is benefiting from that. I think the recent last 1 month event, what's happening around Taiwan, essentially show the determination of the Chinese government. So I think this is clearly, after the war which started in Europe, essentially means that if there is a concentration of power, decisions which are not good for the economy can happen. This is something which people are worried about. It still hangs in balance, essentially, as far as what's happening in China and how the geopolitics in that region will shape up. India will be directly impacted on anything that happens. So I think it's a bit simplistic to say that India will always be a winner. But in the economic arena, at least in the near term, we don't expect any major kind of eruption and a war situation in Asia. And if the Chinese economy continues to slow because of what's happening in that economy, clearly that's good for that's good for India, especially as commodity prices come down.
No, absolutely. I take all of that. My question was more to do with flows, Sandeep. How does that, I mean, what makes a market uninvestable? Or do you think, I mean, people are going are reading too much into this, and maybe 6 months down the line, I mean, the government, they realizes, well, they're hurting themselves too much, and they pull back a little bit. Is that possible? Your sense?
Yeah, so I think that's a very valid question. And in terms of flows, yes, we could see this kind of a reversal and a sentiment and, okay, now it's back to the economy, which is a prime focus for China, and therefore we should invest. And that's something which can happen. But I think the underlying geopolitical realities and structural objectives of the government have been signaled very clearly. So to that extent, that is a worry, which is why I think on a longer term economic basis, we see what's happening in offshoring, what's happening in trying to get supplies diversified and the supply chain more robust by not dependent on one country. These are longer term trends. So the flows, yes, they can reverse for a couple of months, but the structural widening of the supply chain and that the beneficiaries should come to other countries in the vicinity of China, and hopefully India can be one of them. That will happen. But yes, your question on flows, right now, it seems negative and it can change, but I doubt it can happen structurally now.
Sandeep, what about some of these platform companies which had a massive rally last year, and we have seen a near butchering of those through this year? Of course, there's been some reversal in line with the market, but you know, how would you approach some of these names which sort of made good money last year?
No, we don't have much coverage on these names, so I would be, it's difficult for me to give any personal recommendations as such, honestly. So I would just want to avoid that.
Stocks, that's also been a space where the jury is still out on whether we have seen the lows or not. Your view?
Sorry, I missed your question.
The IT stocks.
Okay. I think IT, we like HCL Tech. It's currently getting a lot of attention. There's definitely pushback on this, on how deep the recession is. Our view is actually the margins will positively surprise. And to that extent, the earnings growth and the valuations are compelling right now. For a longer term investor with 2-year plus time frame, I would think this is a good time to buy. A lot of negativity is priced in.
Okay. What about some of these auto names? M&M has been the biggest gainer, up 50% this year. Eicher Motors is up 10% this month. Most of them sitting at 52-week highs. What's your pick of the pack here?
Autos have done very well. Beginning of the year, end of last year, we liked these names. I would be going a bit slow on these names and waiting to see if this consumer demand continues to be strong. I think there's a relative value definitely in IT right now and in financials.
Just in IT, since you said that, just wanted to extend that point forward to some of the mid-cap IT names that have had a very strong run. And many of these companies, whether it's KPIT Tech, Tata Elxsi, have an exposure to the fast-growing auto electric vehicle segment as well. Do you think this is still the space to be in, despite the rally that we've seen?
Yes, structurally, definitely. There would be ebbs and flows here, but in the next 5 to 7 years, this space will be much larger than what we see today. And the fact that Indian auto companies are also getting into the game, offering a decent product at an affordable price. I think definitely these businesses will benefit from the structural shift happening in the auto market.
All right. Thanks very much, Sandeep. Great speaking with you. It's a pleasure, as always, having you with us here on the program. So, a good conversation. The market, by the way, is holding on. We've got, 9 points on the Nifty, 17,970. So, I mean, refusing to, give an inch, that's how you describe it. It was very evident yesterday. It's very evident today as well. Good-looking screen, Sonia.
Absolutely. But there is one space that has been in focus, right, for the last 24 to 48 hours. That's the power space. Several states have been debarred from power trading over non-payment of dues. Now, the defaulting DISCOMs cumulatively owe 5,000 crores to Gencos, the highest being in Telangana with 1,380 crores. We have some gentlemen joining in who have been a part of this industry for very long. So let's find out their view. R. Lakshmanan, the Executive Director at REC, and Rajiv K. Mishra, the Director, Marketing and Business Development and Chairman and Managing Director of PTC India, join us now. Gentlemen, morning to both of you and thank you for joining us. Mr. Mishra, I want to start with you. These instances of non-payment of dues have happened several times in the past, right? It's nothing new. What do you think is the long-term solution to this issue?
I think what the government has done since the month of May and June is step-by-step structural changes, which is very much required for this sector. If you remember, in the month of June, the total outstanding by all the state discoms were in the tune of 1,30,000 crore. And during that time, a new rule which emerged, or rather which was brought by the government of India, was the late payment surcharge rule. And that was in the month of 3rd June, it was introduced, which said that all the payment of the discoms will be frozen on a particular date, and then including the surcharges, and that will be paid in installment. And based on that, all the new outstanding as well as the earlier outstanding need to be cleared if the state wants to participate in the short-term market, either in exchange or through some other trader. So that was a decision taken way back in the month of June. And in the month of August, the first installment of the late payment surcharges were released by the two of the central agencies, that is PFC and REC. And that was a major milestone which was achieved. After that, it was expected that all these state discoms will keep clearing their dues so that they can participate in the short-term market. But based on what the outstanding, which you mentioned, more than 5,000 crore, day before yesterday, a decision was taken by POSOCO, who's the nodal agency for this, to debar 13 states, 12 states and 1 union territory, not to participate in the state. But you can understand the impact of it. This was a very, very wise decision, because at the end of the day, 6 of the states could liquidate their outstanding, and they were allowed to participate in the market. So that is a major development. And the other 7 also are trying hard so that they can liquidate this outstanding and they can participate in the market. It is important that market corrections has to be done all the time. Otherwise, keeping an outstanding of so much amount in the market will keep creating pressure not only to the discoms, but also to the generators and all the participants in the sector. So structural changes in the market is required, and these are some of the major changes which can bring a lot of discipline and financial prudence in the market.
Good morning, gentlemen. Mr. Lakshmanan, would you agree with this perspective put forth by Mr. Mishra?
Morning. Thanks for having me. In fact, broadly, I would concur with what he had said. In fact, going forward, I think this will bring in a lot of discipline to the overall distribution space, wherein they will have to clear the existing arrears in a defined installment spread over 1 to 4 years, which has already kicked in, and most of the states have honored that. And going forward, again, the current dues have to be paid month on month within the given time frame as per the late payment surcharge rules. Based on which I think action is also being taken by the nodal agencies, POSOCO, so which has had an impact. For example, the 13 states which were initially debarred from accessing the power markets. So out of them, 7 have cleared. So they had a cumulative outstanding of current dues of more than 13,000 crores a couple of days back. So which is significantly come down as we stand today at 5,000 crores, which is accounting for the 6 states. So going forward, I think this would be a critical framework for us to adhere to, and this will actually bring in a lot of robustness in the financial health of the entire power sector, and this will also probably bring in more discipline for the state governments and the discoms, especially to clear their regular dues to the discom. For example, the outstanding subsidy arrears and the government power department bills to the discoms, which is to the tune of 1,30,000 crores. So this framework would also push them to regularly liquidate these old arrears also. And in the process, REC and PFC have also supported the discoms so that they can go through this liquidation of arrears with the help of transition financing as well.
Sorry, I mean, just a bit of a layman question, Mr. Mishra. Will this, in what way will this sort of force states to clear past dues, arrears, as Mr. Lakshmanan put it? Could you provide us with some sense of how much of what is outstanding, these arrears, are dues for power, short-term power, power bought through PPAs. I'm assuming it's more the latter than the former, right?
Yeah.
Yeah. And barring states from buying power on exchanges only, how much power gets bought off the exchange? So just some fundamental points, sir.
Prashant, let me make it very clear. I mean, all the outstanding what we are discussing are mostly related to long-term or medium-term power procurement. When you are buying power in the exchanges, you have to give it in advance. So states, when they are buying power from the exchanges, they have to give the liquidity in advance. So the outstanding is not in terms of the power which they are procuring from, and that's the irony. Let me tell you what the power, what they are buying from the long-term PPAs are at much cheaper rate in the recent times compared to what they are paying in the exchanges. And if they are not liquidating their outstanding, which is cheaper power, and then they are buying at a higher rate from the exchange, which again they have to put through cash in advance, then that's the irony we are seeing. And rightly you pointed out when I said in the month of June, total outstanding was 1,31,000 crore. Most of it was for the long-term PPAs with various IPPs.
What is the...
And very small number on account of some of the credit facilities being provided to the DISCOM for procuring power through the short term or through the exchanges.
So, Mr. Lakshmanan, just can you give us the exact number? I didn't get what is REC's total exposure to the DISCOMs. And the reason I ask this is because in the past few years, banks have reduced their exposure to power DISCOMs, and a lot of the slack has been picked up by REC and PFC. So the highest DISCOM exposure now is with companies, you know, like REC and PFC. So, Mr. Lakshmanan, your view on, so if you can just tell me what is the exposure that REC has to DISCOMs currently, and what do you see as the way forward?
As of June quarter of the current year, our exposure to DISCOMs in terms of outstanding loan book stands at 39%, which is around 1.56 lakh crores. And this number has been roughly in the same range over the last few years, so it has not abnormally increased. So it has been in the region of 35% or one-third of our loan book. It has slightly gone up in the recent few quarters. But most of these additional loans which have come in is in support of the overall power distribution sector reforms which the Government of India is pushing. And this we believe would be overall in the interest of the DISCOM's financial health, and as well as the upstream companies like Transcos and Gencos where we have substantial exposure. And most of these loans, like if we see the out of the 1.56 lakh crore loans that we have to DISCOMs, more than 50% of them are capex loans which are backed by assets of the DISCOMs. And the rest of the loans, it's around 75 lakh crores, which is towards non-capex loans, which would constitute the liquidity infusion scheme or the LPSC loans or other working capital loans that we have extended. But out of that, around 65,000 crores are backed by state government guarantees. So they are fully secured loans. And around 10,000 odd crores, which is around 14% of the non-capex loan to DISCOMs, that again is secured by the assets of the DISCOMs, which are non-encumbered. So in terms of, apart from the regular escrow mechanism on the revenues of DISCOMs, so we believe with the late payment surcharge rules and the revamped distribution sector scheme, which is again bringing in a lot of pre-qualification conditions on the DISCOMs and the state governments and the state regulators, so which will bring in a lot of transparency and accountability in the way the DISCOMs are operating. So this will overall going forward should improve the financial health of DISCOMs as well as the upstream companies.
Mr. Mishra, you know, that point that you made, it's strange that when states have so much dues on what long-term contracts and power purchases, they're buying power at more expensive rates on the exchange, spot power. Why do you think that is happening, and what's the basic reason?
If I need to explain the portfolio of a state when they are procuring power, almost 90% of the power is tied up with the long-term PPA and the state-owned generation. So they require around 5 to 10% of the power from which is the shortage from the short-term market or the exchange. So what they generally do is the long-term tie-ups are generally at a reasonable rate, because if I take an average power procurement cost of the country, it is in the range of 4.5. Whereas if you see the recent time, the exchange rates, it has gone up and it is in the range of 7 to 10 rupees average in the last couple of months. So keeping that in mind, you can understand that they are procuring power at a higher rate from the exchange, but to meet the shortfall, that is the last leg, that is 90 to 100%, 90% to 100%, to meet the entire power requirement of the state. Now, the two things can be improved in this is better power planning. And then the second important thing is to bring some kind of a financial prudence when they are buying power from the exchanges or short-term market, that what kind of power they require at what point of time. They need to keep a good understanding of the things, so that the prices should not shoot up to a level which we have seen in the last so many months in the short-term market.